Welcome to Galaxy Brains.
An infinite amount of cash.
I'm your host, Alex Thorn.
The U.S. banking system is sound and resilient.
Bitcoin made a new all-time high.
If you're not long, you're short.
Satoshi's going to come on there, laugh hysterically, go quiet, all Bitcoin's going to be erased.
Bitcoin's the best crypto out there.
Bitcoin is going to zero.
Welcome back to Galaxy Brains. I'm your host, Alex Thorn, head of firm-wide research at Galaxy. Bitcoin not zero. And we have a great episode for you. Mike Dudas, co-founder and managing partner of Sixth Man Ventures, originally CEO and founder of The Block, is our guest. Going to talk with Mike about a whole variety of things, politics and policy, the trends that he sees, that he's investing in, a lot about use cases and apps, and less about infrastructure with apparently Mike and Sixth Man Ventures. Fun conversation. I've known Mike a long time. Great to have him here. And of course, we'll check with our good friend Bimnet, a BB from Galaxy Trading, as always, to talk markets and macro. Before we get to that, I need to remind you to please refer to the link to the disclaimer in the podcast notes and note that none of the information in this podcast constitutes investment advice or an offer, recommendation, or solicitation by Galaxy or any of its affiliates to buy or sell any securities. Let's hop right into the show. Let's go now to our guest, Bimnet, a BB from Galaxy Trading. As always, Bimnet, welcome back to Galaxy Brains.
Thanks for having me.
What is happening? Because we are recording this a day earlier than we normally do, so it's Tuesday the 17th. Tuesday the 18th. So it hasn't been that long since we talked last Wednesday, but some data came in. I mean, where did we stand? I saw a headline that said a big bank was maintaining their 2 cuts before the end of the year outlook, despite hawkish language last week from the FOMC stuff. Where do we stand in your mind?
I think that, the Fed is going to be more inclined to cut this year than was stated during FOMC and versus what they had in the dot plot. I think you've seen CPI data turn lower and key components in CPI move lower, like, housing came in at 0.3. PPI was soft. And if you extrapolate the components of CPI and PPI, you're looking at a PCE print next week that is going to be anywhere from like 0.15 to 0.2. The Cleveland Nowcast, has it at 0.21 month on month, And so, you're looking at an annualized PCE number that's going to be close to like your 2.6 area, which is right on target, which is, what the Fed wants. In addition, you've seen softening in, employment indicators. You've seen, although non-farm payrolls is the, small exception to that. And then you've also seen retail sales miss to the downside today and over the past couple of releases. In addition to that, you had revisions lower to retail sales of the prior month today. So it looks like, spending is coming in soft. You've got inflation indicators that are moving more towards target, and you've got employment kind of softening as well. And that means that, the Fed is definitely headed in the right direction and could certainly be warranted in cuts. Taking it a step further, I think that the data is going to continue to deteriorate over the next couple of months. We're going to see probably a bigger uptick in unemployment as a function of some revisions, and you're probably going to see continued slowing in broader economic trends as well. And then you're going to start to be in a situation whereby, the September FOMC or even the July FOMC, where it really makes sense to start cutting. Because if you think inflation is moving to target and you're confident that it's moving to target, then you are probably 200 basis points too high in terms of where rates are currently set, right? Neutral is probably somewhere close to 3%. And right now the Fed funds range is 525 to 550. And so that means you could, in theory, be very far away from neutral. So I really think that you're on the cusp of a very significant kind of light switch going off in the market, that being that data's turned enough to warrant cutting, right? And if logically you're at the point where you're like, I'm comfortable cutting, then you should really be thinking about the magnitude of your cut and how quickly you should be doing your cuts to get to neutral, right? And so I really think you're on the cusp of the market starting to think about cuts in the 50 bip increment, back-to-back 50s even.
Wow.
Because realistically, if unemployment really is coming lower, I mean, I've got a guy telling me that the payroll revisions coming out in August are going to take unemployment close to 4.3. The summary of economic projections that were released for June during last FOMC had unemployment going to 4%, right? And so I think we're at 3.9 now. And so
That's
if
a
you could,
pretty big jump.
You could be at like 4.2, 4.3 pretty quickly.
Yeah.
And then you're going to tell me that peak core PCE is at 2.6%, which is, let's just say that's pretty good.
Yeah.
And so quickly the market could be at a point where they're like, wow, employment's softening, inflation is softening, everything seems to be turning lower. So why are we at 5%
Yeah,
change?
and now this is the soft landing attempt, right? Because
Correct.
the other argument would be that the risk of reinflation is so high that like it can still bear more.
Yes.
But the danger from that is that you end up having the economy have a pretty hard landing.
Correct.
Because once you start accelerating from 3.9, you're saying to 4.3, that's a pretty big jump if that were to happen.
No, absolutely.
All of a sudden it's like, holy crap, like unemployment picture's looking a lot worse. You know, better if you want to cut, worse if you need
but
a
there's
job.
so many things that already are signaling. Like, part-time employment this year is up 18%.
Well, isn't that a big you look into these numbers? Isn't that a big part of the unemployment picture when we say that when the president, for example, takes credit for having unemployment come down so much in a lot of those jobs like DoorDash and stuff like that?
No, absolutely.
More than ever before.
And there are like estimates about sole proprietorships, how many jobs that those things at, and so there's lots of weird anomalies.
Yeah.
And Powell is openly talking about it.
Yeah.
And so and that's why they pay attention to things like the revisions.
So, is there we've talked before on this podcast about, for example, Trump politically or the White House generally politically either trying to influence the Fed or not influence the Fed or the Fed's role in that sort of political situation. Like, wouldn't big cuts or like any cuts even right before the election? I mean, isn't there some risk? I think you might have said before that theoretically you'd prefer not to do that if you're trying to not to appear to be apolitical. Doesn't that have a big impact, you think? I mean, one way or another?
I mean, at the end of the day, there's a ton of people that vote with their wallets. They don't care if the politicians are giving them the money or it's a private corporation. And so, I think there's a lot of voters that are like, I'm happy with where my wallet is and what policies are. And so I might vote that way.
Because if they cut rates, it gets easier to buy homes cheaper and possibly your assets go up. So
possibly,
maybe. I mean, maybe
it's totally,
probably
it's
in the long
totally
run,
possible.
Yeah.
But what I would say though is I would pay attention to the measures that are currently being talked about by the administration. They're super stimulative, right? They're talking about like more relief for first-time home buyers or first-generation home buyers. I think there was a program announced the other day that gives you like $25K back, which is tantamount to like closing costs on the average home these days.
Yeah.
There are more measures to enhance Social Security in terms of eligibility. Folks that are on like SNAP benefits, they might now become eligible to receive some Social Security benefits. There's chatter about home equity loans and what the Fannie and Freddie can do to help assist in that. And so what you're basically seeing from the Democratic administration is all hands effort to stimulate the economy going into the election.
So fair. So is part of your point that a 25-bit cut or even a 50-bit cut, they're already doing plenty on the election side of it, regardless. So it's not like
and asset prices are at the dead highs. Look at the stock market.
I know.
I mean,
did they just go? Let's say we go on a cutting cycle. They just keep going higher.
They're good. I mean, I heard it best the other day. Some guy was like, "So people are telling me that bad news is good news for stocks," and then when there's good news, people are telling me there's good news is good news for stocks. And this week I heard that no news is also good for stocks. So we're just stuck in the point where
I guess
it looks like it's one of the best hedges in the world.
And if you look at it, it is a great hedge, right? I mean, a classic inflation hedge is equities, right?
Yeah.
And they earn cash. But also if you look at the multi-decade history of the U.S. stock market,
well
it is
every
up
year.
only. Not on.
And it doesn't matter what administration's in office. Administrative agnostic.
Yeah. Well, this is a little bit more existential just for the last minute or two here, but is it really up? Have you seen that like adjusted for inflation chart where like the peak was like 1929 in the U.S. stock market?
Yeah.
Like if we adjust for like M2 or whichever metric we need, it's actually like on a real basis, like kind of flat.
The big popular one among crypto folks is like relative to the balance sheet.
Yeah.
And so, you could think about it.
Maybe that's why it's up because the dollar's
is weakening, and this
Forever.
is just another expression of that.
It's maybe
totally-
one way to at least tread water.
Yes.
The other thing is, isn't it mostly just like we don't like to name single name equities, but isn't it mostly just like one stock that's basically leading?
It's
or like a handful.
It's
Six?
like 4 or 5.
Yeah.
And the Magnificent Seven is what they're known. And,
Yeah.
And the big part about them that's very unique from any other point in history is the magnitude of the stock buybacks programs that they have. They are literally constantly on the bid for their own shares. Every day that passes that those programs are active is less supply less float in those companies, and there's a constant bid. And then you have the performance issue where, folks are benchmarked to these indexes, and these indexes just keep outperforming most of these folks, and so they're forced to chase. And you're gonna have another Santa Claus rally going into the election, and if you're not long these big names, you're short, and so it becomes one of those things where you just have to keep up. And it becomes, very
self-fulfilling.
Exactly.
I mean, even I didn't want to buy some of these big AI stocks.
And now you're
3 months ago, I thought I was super late, and I was.
No,
and
I mean, we could talk about the AI.
They call it the AI rally.
Yeah.
Like,
no, but Nick Carter.
By the way, it's not just that one stock. It's
multiple.
Several of those
Yes.
stocks all have big AI components. And
no, absolutely. And honestly, I think that the AI theme is here to last for decades to come.
Yeah.
It's got implications on everything from power to productivity.
That's what Nick was saying. On the pod,
And he's actually he was tweeting some good essays out this weekend.
Yep.
One of which I read. But what startled me was really like how folks are dramatically underestimating the power demand growth that we're going to see over the next decade. I heard a couple months ago, I was hearing figures that were like 10% increase in power production is needed. And the paper I read is like you need at least 20% plus.
Wow. Well, it's gonna be a big deal. The amount of electricity. This gets crazy. We need nuclear. I'm coming back on the nuclear train, but we'll save that for another conversation. Bimnet Abibi from Galaxy Trading, my friend. Thank you so much.
Thanks for having me.
Let's go now to our guest, Mike Dudas, managing partner, co-founder, founder of Six Man Ventures. Mike, thanks for coming on Galaxy Brains.
Thank you for having me. Lovely to be here.
I first met you in the Block's office, I think in NoHo, right? Just north of Houston somewhere.
Indeed.
And so I should say, for anyone who doesn't know, also co-founder, founder, and former CEO of The Block. Yep. One of few true crypto trade publications, and now I guess research company and other stuff as well.
Yeah, absolutely.
There's a history there. You're not at The Block any longer.
No.
I'd love to hear the story from your perspective. But actually, before we even do that, because you were also you had long background in payments before you did The Block.
Exactly.
Maybe give us a little bit of your story before we get to The Block.
Yeah.
And then, of course, Six Man. And
I'll try and do it as quickly as possible. So I'm 45. I'm a pre-boomer, I like to say. But it means that I had a career before crypto. So I started at Disney, and I worked in their corporate dev and M&A group, went to business school, spent 2 years not learning, but having a great time. Came out, had no idea what I wanted to do. Moved to New York and have been in, the tri-state area ever since.
As one
Recently
does.
Moved to Connecticut. But basically, moving to New York at that sort of uptake time in startups and technology, in New York, like it was becoming the second place to Silicon Valley. So I worked at a startup for a few years, and then I ended up at Google. New York's Google office. And that was sort of like the innovation office for a bunch of different experiments. The first was kind of YouTube media type stuff, and the second was Google Wallet. And that was literally where I got introduced. I'd never worked. I had no qualifications to work in payments and fintech, financial institutions. I'd never worked on Wall Street, but Google allowed folks who were sort of top performers to just jump into a new challenge.
Right.
Okay. Right. Google Wallet was 15 years before its time. The idea was you'd tap your phone at a terminal at Duane Reade or Walgreens, and it would transmit your payment, your loyalty information, your coupons. Anyway, that still hasn't happened.
Yeah, it's only the credit card tap. Basically, right?
Exactly, with maybe a loyalty card, and you get your passes. And what's wild is
That's
it's
true.
not even technology like NFC where you tap. it's like a QR code typically. You know,
Oh, wow.
still when you go to the airport, you're
Yeah,
scanning.
that's true.
You know, that's how.
Oh wow! So that's really what it was. It was like tickets and those types of things.
Totally.
Because I think even when I do the the priority pass, for example, like for lounges and airports, like I can have it in my wallet, but I'm not sure if it NFC taps. I think it just shows me the number and I can show it to them.
That's you either show that most often. In Europe, they do it better. In Asia, of course, Asia's QR codes. But even coming in here today, we're not tapping. Like I had to show my QR code to get into the Galaxy event.
Yeah.
So anyway, that's the technology that's manifested itself. I think it's a good lesson for crypto. It's not always the best technology or the easiest, but it's sort of the one that's the most ubiquitous and easiest for folks to understand.
And then you were at a payments company, Braintree, right?
Yeah, so I left Google Wallet, learned a lot, and then went to Braintree, which had bought Venmo. So Venmo at the time had fewer than 20 employees. And I was sort of like the adult in the room at 35, working on, hey, how do we get Venmo to basically do enterprise deals? So Venmo was like this P2P app.
Yep.
While I was there in a year, it wasn't me, by the way, but it went from 30,000 active users to over 1 million. They ran Subway ads, and it was really the first successful breakout consumer payments app in the U.S. since PayPal. Wild success. And so they said, hey, well, we can become PayPal. Like we'll do Venmo Pay.
And
so anyway,
checkout and whatever online
exactly
stores.
all of those things.
Yeah.
And Venmo's advantage and Braintree's advantage is they worked with Uber, with Airbnb, with Grubhub, with all these early mobile payments companies. So it was really, really exciting. Learned a lot about payments. But what was interesting about mobile is every single one of the companies that had a mobile app and had a mobile payments experience wanted to own their own stack. And by the way, you see some of these parallels now as we start to talk about app chains, the breakout apps in crypto.
I remember you were saying the joke was like every one of those companies, like the Apples and the Ubers, they all wanted to become their own bank.
Exactly.
But now it's one of the jokes. I think this has even progressed, but it was like every wallet wanted to become its own exchange, right? Or you had
That's literally what's happening, and every app wants to become its own app chain with its own permissions and parameters.
On the whole stack, on the validators.
Unquestionably, why not? Like when you see Base, for Coinbase getting all those sequencing fees, why wouldn't you want to launch your own chain? So, it's a real. There are so many analogies to what we experienced 10 years ago and beyond. But the one thing that was like really illuminating is payments are really expensive, as you know. And so Uber, even the biggest merchants were paying, 3, 4, 5%. A lot of fraud to the card networks and the issuers. So they were looking at Bitcoin. Braintree was looking, and PayPal at maybe Bitcoin payments, and that was what got me interested in cryptocurrency. And at the time, Bitcoin fees were much lower. The reason Bitcoin didn't work at that time for payments is the block settlement time. So like basically, by the time it would settle, there was like so many opportunities for chargebacks, for fraud, for this. You
had to stand there for. Honestly, especially if you're trying to wait for a couple confirmations, could be an hour.
Exactly,
right? It's just not going to work.
And again,
is that the main cost, by the way, in payments that really balloons the cost? Is the fraud and the chargebacks? Is that the real?
And then the marketing, meaning like basically, payments is so competitive that to get me to use your card versus somebody else's
There's
card.
a lot of cards too.
Yeah, I'm going to have to give you incentives, and those typically get charged back to the merchant.
So the points, all that stuff.
Exactly. Like Amex, I think, is right around their buildings next door.
Yeah.
They're a really expensive card for merchants.
I know, they hate it. I carry a Visa. I have the Amex Platinum, mostly because I fly in Delta, and it gets you into the lounge. But I carry a Visa around just in case, basically, because a lot of don't take it.
I was in Switzerland last week, and it's less than 50%.
Oh, wow.
Except Amex.
It seemed widely accepted in the UK, just to know. It's a little bit of a tangent. But so was part of the idea, and maybe since you're a payments background guy, the credit cards and the debit cards, they're all this pull system where like, you have to swipe theoretically, but I mean, you can also just like, if I give you my card number, you can basically just charge me whenever you want, right? And and I guess that's kind of where the fraud comes from, right? Because if I lose it, there's no cryptographic signature actually occurring, right? Like you just suck it from me. Whereas with Bitcoin and
it's a good point. So what happens is they do have all your customer information. You're like KYC beyond belief, right? So if your specific card I haven't had fraud on my card, and I've had it for X number of years. Like they're going to approve virtually every transaction, even if like I put in the postal code wrong, zip code wrong.
They're just like whatever. Yeah.
But as soon as a pattern starts to develop, to your point, they'll start to reject more transactions, and then you start this loop where it could
Gets
become
hard.
difficult.
Is that true?
Yep.
So for you specifically, even if I get a different card, they'll be like, well, he's whatever it is he's doing. Like, we don't think he's stealing from us, but like, so he's sloppy with his number or whatever. But with crypto, right? It's a push system, right? You can't. That's one of the interesting things.
Bear. I mean, it's a bear asset system.
Right. I mean, you have to cryptographically sign every time.
It's gone. Like, you're offering it up. It's not credit.
Right, that's true. I can't say, oh, just kidding, I'll pull it back.
No.
This was one of the interesting things in crypto that I saw people were trying to solve, and I think Visa put out, if I remember, it was either Visa or MasterCard, but I'm going with Visa on this one. They both do a lot in crypto and payments. I think they had a paper on a recurring subscription standard for crypto, which is actually quite confusing and complicated, given that you don't want to have to. It's not really recurring if I have to go in and sign a transaction every month.
Yeah. I think these are. I know actually for a fact they're pilots. I like that they're experimenting. Most of those things, including things like stablecoin settlement on the Visa network, these are proof of concepts that I think I'm really excited that they're testing this stuff out, but it's not material to them, from a financial perspective. I think what they're saying is, just think about Visa. It's a network of networks, right? They support so many different payment networks in individual countries and, you name it. And so, the way that they look at Ethereum or the way that they look at Solana is, hey, that's a settlement network, right? That's something.
Sure, we can extend to that one.
If we have merchants who prefer to accept stablecoin, then we will settle to Ethereum. We will settle to these L2s, or we will settle to Solana or Bitcoin increasingly. But again, you and I both know. I mean, it would be like a piece of dust on this
compared to the
table
massive
compared
amount.
to their core business.
One of the things I love about the fact, by the way, that Visa and MasterCard in particular, and both of them have a lot going on in this space. Maybe
they do.
Yeah. One of the things I love about that is that there's a tendency, I think it hasn't been, that banks should also control the payment rails. And this is one of the things I fear about certain of the stablecoin regulation proposals, where it's got to go to banks. That's what a big dispute is. All the banks can only issue them, right? And it's like, the reality is banks are lending organizations. They don't need to, and perhaps shouldn't also control the payment rails for the whole world. They don't today, right? I mean, payments companies are huge and separate. I hope that, for example, a Visa or a MasterCard, if they so choose, could be able to issue a stable coin. They already handle a large amount of the dollar payments in the world, right? And that this banks versus payments, is that something you encountered or thought about?
Yeah. So historically, to your point, the banks have competed to issue, like, their core business models are, credit, right? Or, basically making money off, like, my financial investment. So they're what's called the issuer, and they'll give me a line of credit, and then I will get my credit card or my debit card if I can. So it's either a credit card where they're giving me credit to go pay for things, and I can use the Visa network or the MasterCard network to pay. Or it's debit, where I have an account with the bank and they're simply debiting my account as I go pay using, to your point, a separate network, right? The MasterCard or Visa network.
Or like those, maybe those are the ATM networks, but on the back of the debit cards when it's like...
Oh, Star,
those things.
Yeah, and so, exactly. Yeah. So as I mentioned, network of networks. The Visa network, the MasterCard network do include a number of different nodes and other folks who they have, like, sort of settlement and transmission agreements with. Okay, so it's like this complex web across both, and then there's debit and credit. But then beyond that, at the bank level, where you're talking about, it's not just debit and credit. There's wire networks, right? There's like SWIFT and SEPA. There's like so many. Yeah, exactly.
Stuff,
I do think there would be conflict, and it really hasn't worked out when the person who's sort of like issuing you the credit is also the one who's directing and routing the networks.
Right.
And by the way, what's interesting is you have those conflicts actually a bit more in crypto in many cases, where, the holder or the smart contract is actually doing maybe some of the routing on.
Or the widespread use of exchanges, right? It's like the one that holds it is also where I trade it. It's also my wallet. I mean, it shouldn't be. I don't use an exchange as a wallet, but many people do and did, right?
Yep,
I mean, I have a huge problem with FTX. I mean, that was, whole funds got wiped out, managed funds.
And I think so. I'm somebody who does do that, right? So I have, of course, my own self-custody, and obviously as a firm, we have a robust self-custody set of practices at Six Man Ventures. One note on that, it's become increasingly difficult for assets that a centralized custodian can support. We've actually been getting pushed more and more by U.S. regulators to put our assets that we believe we know how to custody ourselves with a high degree of security and sort of independence. We've been pushed to, and actually, if we do that, we can then use them on chain and actually increase the returns.
Which you might have depending on what it is, you might have a fiduciary responsibility to do.
If
it's like staking, for example, pretty straightforward.
Yeah,
right?
we've put notes out to different stakeholders. I can't name them specifically, who are reviewing. We're a registered investment advisor, practices as Galaxy in the U.S.
Yeah,
and effectively saying, like, we believe that if we can't self-custody and do things on chain for the protocols that we've invested in, that we're actually giving up economic opportunity and not acting as a fiduciary.
This is a tricky question because we're talking about the custody rule, basically the SEC's custody rule, which they formally, I think, extend. I don't know. Has this gone into effect? Or I don't think it's actually gone into effect.
It hasn't, but you basically, as a manager, you have to act somewhat conservatively as if it will, because based on the history of enforcement actions over the past few years, that they're going to assume there's going to be basically, most likely, if the regime stays the same, a bad faith interpretation of your behavior.
Right, because they'll say, look, I mean, you can't say you didn't know what we were going to do because it's been published.
Yeah.
The
idea we would be like, well, the way that you introduced that sort of violated the principles of how these things are viewed, and we disagree with it, and we commented, and you asked us for comment, but then you didn't respond to them, and we'll go back and forth, but ultimately, that's not the position that we believe as firm stewards of capital we should take.
This is the custody rule provides, well, it is a rule, and the SEC has provided guidance and clarity on how SEC registered investment advisors, so think about managed funds on behalf of other people, need to custody the assets that they manage on behalf of those people. Now, that could be equities, commodities. Well, it used to basically be securities primarily, and they said these have to be held at a qualified custodian. So that's typically a bank.
And then they created this new thing that literally is not defined, doesn't exist. Which is crypto asset securities.
Yeah,
I don't know what that is.
But I think also in this new version they also added commodities.
They did.
So now it's like if I hold gold for somebody or something else, a lot of people aren't aware, but there may not be qualified custodians for those. And yes, crypto asset securities.
Not. So that's the other thing is we could have made a choice. Most of the top firms, we're based in America, but of course, we have offshore funds that we do a number of our investments through, like every other crypto fund, because that's the only way you can operate. But you basically, it's like you could there's like a fork in the road, and it's effectively not operate my business, or like I operate my business and assume that we're going to have some level of sensibility in, most likely, I think over the next couple of years, legislation that then informs what regulators can do. Yeah. And a lot of that is obviously premised on who the folks are who are sitting in the key seats, the key legislative committees in Congress, obviously. And
well, I mean, since you brought it up now, let's get into it a little bit. I mean, what is your take on this apparent? Well, I would say there's two things. There's a potential regulatory pivot that has occurred. That's what I've been calling it. Not a pivot, not a about face, but most acutely illustrated by the apparent total lack of engagement by the SEC on the Ethereum ETF applications.
Yep.
And then sort of last minute, like 3 days before the final deadline, was like, just kidding, everybody get us your stuff. We're going to approve them right now. And then they did approve them.
Yep.
Also, though, a big political, I would say, ground shaking in the politics of crypto assets certainly with all of former President Trump's engagement with the industry, but also with those major votes, FIT 21, SAB 121, in the House and Senate in the case, and then the subsequent veto, but more conciliatory language from the White House on the veto, on the FIT 21 non-veto. What's your take on this just overall? Is there a shift? If there is it just politics and not yet policy? How are you thinking about?
Yeah. So I'm a clear example of the shift from a constituent perspective. So, lifelong Democrat, recently moved from New York City to Connecticut, registered as an independent, and I'm completely open-minded politically. And I think you're seeing that across the country, an uptick in folks who are open-minded about ideas versus parties. Now, what you read about in the mainstream media, having started the block, I know, a little bit about media.
Yeah.
It would make you feel like there's just two polar opposite, spheres of folks in the United States. That's absolutely not the case when you start to have conversations with folks. But I do think that you're starting to see a really interesting shift. So what's happening is I think that the Democrats, surprisingly, so I voted for Joe Biden. I'm not proud of it. I have pictures that I posted online of me, drinking champagne and wearing a Biden hat. I hope somebody's gonna, when they see this, drag that out. But I deeply believed in, at the time, this notion of liberalism, and I've always felt like crypto is like freedom technology that actually gives anybody access to the financial system, even if they're precluded from that by, call it, the big banks or by, intermediaries that exist. It should seem like the most democratic, like friendly, equal opportunity thing. So that was like sort of my guiding mental model for like why I could support Democrats. Okay, they view it as for whatever reason, the exact opposite. Like, I think that the last 4 years, this Biden administration, with Warren as the proxy, but a number of others, even the squad, this notion that everybody who operates in crypto is wealthy, is fraudulent, and basically not looking at the technology on the face of what it can enable and actually is enabling as primary use cases like stablecoins, which you've talked about at length on this podcast and elsewhere, that empowering technology, but more as a political talking point, and then using basically enforcement action, really eager, deep, penalty-oriented enforcement action dramatically against not. So the whole mission and mandate that Gary Gensler, the SEC chairman, talked about was protecting investors, but not going after the folks who were really, really taking advantage of folks in retail and fraud. I mean, they were. The Democratic politicians were meeting with SBF for years and taking his money, and then they dismissed his court case, and then they put Ryan Salami of FTX in jail, and he donated to the Republicans. So, but the point is, they basically did this thing where they went after the best companies, the best protocols, the most innovative projects, where I believe they knew they aren't going to win unanimously and decisively, but in an effort to paint an entire industry in a really, really negative way. And they did it with a cockiness and arrogance and a confidence that was tone deaf, and they're being smacked down. And it's really heartening, I think, to see Americans, not fall for the shenanigans. And you can see it in the health of the crypto markets over the last 12 months, just from a price perspective, developer perspective, and growth perspective. What's been interesting is Trump and his proxies and a number of Republican leaders who I believe are excited by free markets, by access to markets, who actually walk the walk on, like, I want this person in my region who, doesn't have access to banking to actually be able to, set up a wallet instantaneously and hook into a global, cheap payments network or financial network. They're actually walking the walk and talking the talk. And that's been the shift, and it's been incredible. And then Trump talking about it has changed the Overton window and forced, now Biden to become a little more conciliatory.
Yeah.
I don't believe it. I don't think it's authentic. But it puts me in a tough spot as a lifelong liberal.
What would you do now if it is, there's a meeting I saw reported, Rokana is organizing a sort of a Democratic-focused roundtable. Trump had a roundtable with the Bitcoin miners.
Yeah.
There's clear, whether or not it's durable, there's clearly some movement now.
Yeah.
There's folks I know in the Senate working on some, I don't want to say, it's not the same as Fit 21, but a market structure bill theoretically could be. I feel like a big dispute online in crypto Twitter and among others who are interested in policy about whether or not to use this moment where it's pre-election and now both sides are sort of under pressure to do something to get something done.
I think we should engage.
Yeah, versus wait and hope for a better Senate, House, White House.
So I think so my strategy would be, and I'm like always focus, like as if it's a startup, just focus on the one thing that has the 80-90% impact, and then the other stuff will play itself out. And my strategy differs from some of the folks I've seen. I've seen the folks who say, hey, and I've seen it's like the A16Zs, Coinbase, Electric Capital, and others who seem to be like, hey, they're at the table, let's just get a bill done. It's like better than nothing. I don't believe that, having read, frankly, the Senate's most recent draft of the bill. I don't think that's going to work. At the same time, I love Ryan Selkis as a friend, and he's been a competitor in many respects as the block. I don't think the super aggressive yelling at people. By the way, I respect his conviction, and I've been there at times myself. But I think it becomes a little risky when you're basically almost trying to publicly intimidate versus have a level conversation, a debate. And he had a great debate, a consensus with Marco Amori, Uniswap. Like, to me, that's the tone that you drive for, which is like respectful of the other person, and the fact that while you disagree with them feverishly, you do respect their ability to have a differing point of view. And I'm dealing with this myself. My liberal friends who think I'm nuts for saying, hey, I think Trump is actually onto something here. It deeply impacts not only me, my livelihood, my family, the ecosystem of founders and employees that we've invested in, and the future of, I believe, like financial freedom in America.
Yep.
Hey, maybe I don't love at all. In fact, I dislike, maybe the person who represents that. But, sometimes you have to understand, like, we live in a world of marriages of convenience. And so I'm taking that approach versus, so I'm somewhat in that middle versus like going all in that I'm going to just run over everybody who disagrees. So the Rokana thing, I think it's actually a really poor strategic move by the Democrats because everybody knows it's hollow BS, and it's just a blatant and desperate reaction to the fact that like Trump basically is courting all the Republican voting money. I mean, all the crypto voting money.
Well, politics can make strange bedfellows. All right, let's move on because this raised something. I mean, this is a good transition. I saw reported by Mike Solana's Pirate Wires that Donald Trump is issuing his own, I guess, token. It's not clear if it's a meme token. I guess it is. I haven't looked. Apparently there is one.
Yep.
DJT on Solana, and it would be spearheaded, quote unquote, by Baron Trump, also known as Lisan El Gaib.
Nice.
What's your take? So this is going to transition us. Let's talk about the markets in Solana. But I mean, as a transition here, before the tech or the market, is that? I mean, Trump has sold NFTs in the past.
Yeah.
Certainly, people are raising money to donate to his campaign that are in the crypto market. Is this a legitimate if it is true, it may not be true. It doesn't seem to me like he's confirmed this yet, so I'm still a little skeptical.
Yeah.
But is this something we're going to see going forward more? Is it something we should see?
Yeah, great question. So I have I'm not involved. I have no idea if that particular token is legitimate. What's so interesting though is it kind of has a lot of the characteristics of meme coins in general, which is this great skepticism, mystery. It's hard to figure out if this is the legitimate one. Every legitimate meme coin launched by a team. There's 3 others that are rugs with folks trying to front run it. It's a big, giant, fun and speculative arena. Okay. By the way, that's if you break out of that, and the ones that really do get to that next level, and there are ones like Bonk and Sheeb, and basically can create ecosystems and have long duration, multiple years, sort of integrate into the ecosystems they're a part of. Bonk with Solana, Sheeb with Ethereum. So I think what we've seen lately though is more of a meta of kind of like the social token and the social community token. I do think it's a better expression than the NFT communities. I mean, you've seen the top ETH NFT projects, Bored Ape and Pudgy Penguins both went below 9 ETH today, or 10 ETH.
I didn't see that for Pudgy. I thought Pudgies were doing well.
Yeah, I own gold Pudgy.
You are Pudgy on
I
one of your...
identify it regardless of
I don't know if you
price.
still are, but on Twitter, I know in some I've seen... Yeah.
I'm not changing it. I love it, but...
the apes are sub 9 ETH. That's crazy.
Yeah, they're sub 10. I think they went
That's
sub 9.
Crazy.
So
I mean, to be clear, I'm not a fan of the Bored Apes. I think people who follow me know this, but I'm just saying, wow, what a fall.
So I think the original launch was great, and then what's tough with a lot of these is when you try to go beyond community into company, and they launched a DAO, and had all these huge investors
and stuff. I saw that didn't not go over well. They raised an enormous amount of money.
And then launched a token with a really sketchy lockup schedule and staking schedule.
Right. They also have ApeCoin.
Yeah, that's where they ran into.
And then also I don't know. We'll talk about this too, but video games, dude, so hard to make.
So
I don't think people realize how expensive they are and how long they take and how rarely they're good. Even when you put millions of dollars, they end up awful all the time. And that's their main thing.
What upsets me is the people who were running these projects knew that. And what they continued to do was make these promises while raising innumerable amount, massive sums of money, knowing that there was no plausible way.
Or very unlikely. Unlikely.
Yeah.
But you were making the point, to go back, that fungible tokens may be a better community driver than the NFTs.
So I think so.
Yeah.
But not in the... So you have to kind of go in scales. It's like any other sort of creative or community thing, like YouTube, right? There's... Instagram. There's just so many creators, so many communities. We're now moving to that in tokens.
Yeah.
And I would always advise the prudent person to just wait until these things break out, a real community exists. And then if you think it's fun, jump in with a little bit, test. But what's cool is there's liquidity on them. So unlike NFTs for the most part,
right?
And there's a large token count, so you can get in different sizes. I could be in for 100, you could be in for 10,000, but we can have a lot of fun interacting with the same people. And many of them have events, like the Backpack Mad Lads have events all over.
Yeah, or the Milady raves or whatever.
Exactly.
Yeah.
So you can find your sort of culture and do it. But I do think fungible tokens paired with them, or I think it's a better manifestation of community because it's easier in or out, and people need liquidity. If I buy into a social club, I want to be able to exit.
Well, that's kind of like the promise of, I thought, fractionalization, tokenization,
So now we should get to real assets.
Yeah, let's talk about what else you're interested in. I mean, so Six Man Ventures, though, maybe before we get deep. I mean, you're a crypto focused VC, right? That's
Yep.
What are you interested in? What are you investing in these days?
So we're we have a $140 million fund. It's our second fund. And we invest across multiple ecosystems. So, while I love tweeting about Solana, we're not maxis. We invest in the Solana ecosystem, Ethereum and Ethereum L2s, but we primarily, and then Bitcoin. Our last 2 investments have been in the Bitcoin ecosystem. And we invest in applications primarily, or, infrastructure, but it's like really an application.
Yep.
We haven't invested in L1s or L2s as like a core
Interesting.
thesis. Yeah.
Yeah.
And it's because it's part of our backgrounds. Like we've all worked at, I gave you mine, and my partners in the firm have started companies or worked at them. So, the biggest problem right now is we have an incredible amount of capital. We have incredible amount of attention, incredible amount of speculation, but we don't have enough sticky things that people want to spend time doing.
I love that you say this, because it's been one of my biggest criticisms of I don't know whose fault it is, the entrepreneurs, the VCs, the markets, but I've been saying this
Everyone.
I've been saying this for years, like, please, if you're a builder, build something people want to use.
Yep.
If you're an investor, please find something people want to use.
So what's wild is people are building some of this stuff, but then, I'm building an app. They're pricing it at just insane levels, delusional levels, and being like, well, we're going to launch a token. And I'm like, no, I don't want you to do that. Why don't we actually try to build this like in a very fundamental way, like a traditional startup would
You're
have
just
built.
using this blockchain infrastructure. It doesn't have to be part
Our
of the infrastructure.
best investments, like StepN, we invested in at $15 million. Pump.fun, we invested in at $20 million. Like FTV, like these are incredible teams and companies that weren't focused on maximizing extraction, but are like, hey, let's get capital and the right partners in so that we can grow an incredible business. And like those, there aren't enough people doing it. And if you do that, you might feel like in crypto, nobody wants to like dilute more than like 2%. There's just this weird perception that VCs are bad, or that it's sort of a shame. And it prices people out from success.
But I mean, maybe it's because there's been so many tokens created, right? It's kind of, think about the 21 to 22 era. Like, in fact, since 2015, my research shows that 100 billion has been invested in startups by VCs. Now, not all of that resulted in tokens, but a lot of it did.
Yep.
Now you've got this giant pile of tokens. I was just looking at unlocks. It's not great over the next couple of years.
Nope.
And you're sort of being like, well, I mean, a lot of these are for infrastructure plays. And you're like, well, how much block space do we need?
Modular infrastructure, right?
Well, that's the other thing I was
This
going to
is
say. I mean, the
thing when I
hottest
get,
narratives like this cycle have been staking, restaking, liquid staking, modular DAs.
Like,
again, that's more infrastructure, right?
Yeah.
Where are the
so I'm gonna
things
build an
people
app,
want to use?
and I'm now working with 6 providers.
Whether or not that's the right way, I'm saying like more apps, please, that people actually want.
Of course. But like it's terrifying to build an app when you're getting advice from like. And by the way, I see it day in and day out. The advice from the supposed like mentors and VCs is like, well, use them for DA and, use these guys for security. And it's nonsense. Yeah. Anyway, this is why, like,
but this is an
for
interesting
most
part of your
apps,
thesis,
I do prefer Solana. Like
because
right
of that
now.
simpler, unified monolithic stack, right?
Yeah, call it an integrated stack. I'll get in trouble. Mert will,
He doesn't like if I say monolithic.
He'll tweet me to 0 if I go.
Fair.
But the whole point is an integrated stack right now, given the usage of these applications, like Solana hasn't gone down in 15, 16 months. Obviously, there was a slow period while there were some upgrades a few months ago. But right now, if you're building an app, and you put it on Solana, like Pump, for example, like you're not going to get massively, bottlenecked by the throughput of the network. Like it seems like a great place to launch. By the way, I can also say that, and you've seen this with social tech, right? This new one, there's like Time.Fund today.
I just saw that,
Yeah, there's, and so I'm an angel investor in Fantasy.top. You've got Friend Tech. You've got Farcaster. So each one, there are a couple different L2s that they're on, but those ones also don't have those throughput constraints. But what's interesting is they are more centralized, which is fascinating. No fraud proofs and centralized sequencers, the chains that they're on, than Solana itself. So look, we've just had this like finger pointing thing back and forth. My big thing, less finger pointing and more just like let's get these apps. I'm so delighted that Time.Fund launched. I'm not going to use it because I don't want to give minutes of my time up for a few.
You're not trying to financialize your 5-minute coffee break.
No, but I think it's so cool, and so more of those.
Yeah, more actual application uses. That's really interesting. I want to ask you about you mentioned that some things may be starting to be built on Bitcoin more.
Yeah.
Are you involved in the Bitcoin as a platform sort of resurgence?
Yeah, so I am, but it takes time. So basically, I've been Bitcoin was obviously the first asset I bought.
Yeah.
I was a quasi maxi, for a while, not quite to the degree of a lot of folks, but I never believed that Bitcoin would actually, move to a point where you'd be able to change I didn't think it would happen so fast. Like, I'm so impressed with folks like, I would say like Udi, Eric Wall, like Dan Held, so many other, like countless other, Nick Carter, who were able to get folks, around this mindset of, hey, if we're like literally just using this as money that we like hide under our bed, and that's
Right.
not the be all end all. So
Yeah, to me, it's more like it doesn't have to be the be all end all. I have no problem with if you want to hodl and leave it to your grandchildren, which
in fact,
I
that's
do.
going to be the
frankly.
primary use case.
Yeah.
Literally, that's so I don't like.
Right.
So my strongest belief still is that Bitcoin as the best money in my lifetime. That's the thesis. That's why I hold.
But it could be used for other stuff.
So, and I think that's great.
Right.
So where we're investing is, okay, well then, if that's going to work, so we're not investing in any Bitcoin L2s. And certainly not in stuff that's like building on top of a specific L2 yet, because that's like risk on risk.
Are you seeing some of those already?
A bunch.
Apps for the L2s?
Yeah.
But they haven't
It's
even
wild.
really launched
like
yet.
perp dexes on L2s that don't exist that are being on BitVM. That's like
Still not totally ready.
exactly.
Yeah.
So I'm like risk on risk on risk.
That's interesting.
But what we're doing is looking at things like an RPC provider, thinking about new ways to order
see.
transactions.
Yep.
Looking at somebody who might use Bitcoin funding as a way to launch a stablecoin, Open Delta, is a company that we backed,
Cool.
to launch a Bitcoin stablecoin. And so experiments like that are will work regardless of what L1 protocols or L2 protocols see transaction volume, I think is really interesting. So I'll say this at the highest level, and please don't ask me a deeper question because I don't have the answer. But I do think Bitcoin DeFi will look different than Ethereum DeFi or Solana DeFi. Like, if you're just bringing the same old perp dex to a Bitcoin L2, like, why? It's just, you could say, okay, like whales, Asian whales, have a ton of capital, but no, it's very easy for them to move that through their centralized exchange to, an Ethereum L2.
Yeah, similarly, like, I talk about ordinals, and I am very interested in the ordinals and runes actual token standards and their usage.
Absolutely.
I have an ordinal. It's 10,888. Check it out on your favorite Ordinals Explorer. It's my own avatar. I inscribed
Oh, I love it. Yeah.
I think it's very interesting, but I would say for like tokens, I mean, gosh, Ethereum's purpose-built for that. Like,
Yeah,
should we really
it's-
be force-feeding it into that?
And Solana
But
is even
I don't
easier.
think it. Yeah, exactly. And I don't think it. But I also don't think it harms Bitcoin. If it did, if it jeopardized Bitcoin as, say, the shorthand of digital gold, like truly jeopardized it, I think it'd be reasonable for Bitcoiners to wonder whether something should be done to make sure it doesn't jeopardize that. I don't think it does, though. So to me, it's like, now this is pretty much fine
I
for
think-
everyone. If anything, it's good for long-term security and miners and all
That's
that.
what
So,
I think.
yeah.
So I'm excited about it because it's generating fees that, like the fee picture looks a lot different than it did 15 months
It really
ago.
does.
And that doesn't mean, by the way, these are the things that people are going to be doing,
Right.
to generate.
I don't think
fees.
anyone. I don't think you will really hear a lot of people say that BRC20 standard is like the future of tokens.
And by the way, even the Rune standard, it's
Right.
extremely difficult. Like if you want to launch a yield-bearing stablecoin on Runes,
so hot right now.
yeah, so hot. But like it's very difficult to.
Yeah.
You can't programmatically pay out.
Well, the mint
smart
and
contracts
burn,
don't work.
it's not really possible. Yeah.
So there's so much, but the cool thing is by trying it,
Yeah.
you learn what those limitations
Right.
are, and so
That's
the
been
thing
my
that
most
troubles
the
me
thing I've
about
liked most about the Bitcoin, this resurgence of Bitcoin being used as a platform, is just that you have a bunch of fun, weird people trying fun, weird things,
and they're
who knows
super
what
smart.
will come out about this.
And the
that's
L2s,
durable.
like it probably looks really silly to us. Like, and some of them, like Bob, is like an EVM L2. Like, I have no idea if Bob built on Bitcoin is going to migrate. Like, their plan is to. I hope so.
Yeah.
But I think Arch is really interesting because they're doing it all one, and they're saying, hey, like, we're willing to, encourage applications that the block time, 10 minutes or whatever, 40 minutes, it doesn't matter.
Yeah.
So I think I love that there's so many experimental approaches.
That's cool.
There's going to be a lot of burned capital, but there's going to
Yeah,
be
because there's a lot. I mean, one of my analysts, Gabe, said that there were 50, and then I think our venture team was
we're higher than
suggesting
that,
there's
yeah.
100.
There's over.
And
Yeah,
then somebody
we're
said
up
there's
to like
more than that.
We're closing on like 200. I think venture funded.
You know that we're doing some research on this, but at current block sizes, and let's say a lot of them want to be or are going to be ZK rollups.
Yep.
We're doing some math on this, but I don't think that more than like 1 or 2 even sequencers will actually be able to afford to post, because the amount of data is only 4 megabytes total to use per block, and like some of these need like 600 to 800 kilobytes.
Yeah. So you're
there's
gonna
actually
have,
not space.
This is gonna. It will be Ethereum. 20
Same kind of
18
situation.
or 19.
Well, they'll be like, well,
crypto,
now
it'll be CryptoKitties time.
Yeah.
And we're a cycle away.
Yeah.
Which is again why
and
we're
they'll be
not
like,
investing.
what'll happen is if this really catches on and it causes fees to go, well, they'll be like, you know what, we should create a separate space where those rollups can post.
permissioned,
You know what? Let's call them blobs, though. We could create a blob space. It'll
look
be
at
like
you.
proto because I've been making fun of the Ethereum developer, not really personally or anything, but that proto dank sharding on Ethereum is actually quite similar to SegWit on Bitcoin, which is, well, wait a second, if you do a certain type of transaction, you get a reduced fee. That's basically what they both are. But anyway, though, yeah, that 1 or 200, I'm very unlikely to be that many,
No.
in
It's
2
going
to
to
5
be
years.
it's going to be like 4, 5, 6.
Yeah.
It'll be the same thing as what happened with Ethereum. And then once you saw the 4, 5, 6 successful ones, now we're back to 200.
Yeah.
But, and those 4, 5, 6, the prices are going down.
I love it. I want to ask you about the block before we go.
absolutely.
You founded the block? Were you founder and CEO? I remember this well. You built it pretty big but then you left. I'm trying to maybe you can correct me here too, but then so was that when McCaffrey took over?
Yeah.
And then he did a round to buy out the cap table so that it became private or employee owned, quote unquote, which I thought was really interesting at the time. But what's the story with the block in your mind? Of course, I guess I'll finish the TLDR here. Of course, we later learned that Mike McCaffrey got the money to do that buyout from SBF, a loan from FTX or from Sam. I'm not sure exactly what.
Yeah, I think it was one of Alameda's.
And now, and then finally, and I give a lot of credit to Larry and the other folks that were there, that they weathered this big period. They've now been acquired by an exchange.
Foresight Ventures. So
that's a whole thing here.
So one of the wildest experiences in my life. So I came into the ecosystem. I told you, late 2017.
Well, I was going to say you came from payments in general, and you went media.
I was like, every time I ask a question and I get an answer, I have 10 more questions. So I don't think I can be a VC. I don't think I can go build a protocol. I'm not an engineer. Why don't I create something that can educate people? That's independent. And so started the block and was so fortunate. I'm outgoing. I'm out there. I was public, but I was able to recruit Frank Chaparro, Steven, Dojitoshi, and Larry Cermak. So all just wonderful, incredible people who, by the way, are still building the block.
I know, they're so
who
dedicated.
Have had incredible success.
It's
Those guys are the heroes. All right, they are absolutely best in the world at what they do. And so loyal and dedicated to the people who work with them, not to me, to the people who report. So amazed with them. Anyway, so started this thing, and it's crypto, and I'm a passionate mofo. So we were doing. I was fortunate again to hire people who are doing hard hitting journalism and research. I remember Arjun Balaji, who's at Paradigm now, Teo Leibowitz, who's at Uniswap, some of our earliest researchers. They're putting out heaters, hot, intense research, and it really woke people up, and we got credibility pretty instantly. And then I leaned into that.
Frank had scoops. Now his thing is called The Scoop, but Frank was really reporting really hard in the early days.
Tezos and on you name it, just BNB and Binance having a Shanghai office when they said they didn't.
That was one of the that resulted in one of the greatest memes, right? Which is recommend no more stories like this for your sake and the industry and the business. But recommend no more stories like this from CZ.
It was wild. So and then they put a bounty on us, he and Justin Sun. So anyway, and I don't back down from that. And then we were going after CoinDesk and this, that, and the other thing. But we felt like we were on a crusade in an industry that proved itself, in that 2021 era. to have some major issues. So in 2022. So the thing that I learned though is, and you see this, there's some main characters going around. We talked about a little bit, recently. There's always main characters, and you can't run a publication while like putting yourself in that seat, and that's just the kind of person I am. So I basically decided after about 3 years to transition out of the CEO role. And I elevated our COO, who I'd elevated a few times, Mike McCaffrey, to the CEO role. It's the first time I've ever dealt with a narcissistic sociopath. So somebody who will truly look you in the eye and just tell you something, and sort of a long period of like a long con sort of thing, where they will gain your trust, and hey, they'll get to know your wife, and they'll get to know this, that, and the other thing. Anyway, so bottom line is, this guy convinced me that if I sold it, I cared so deeply about these employees. If I sold the block, he would increase everybody's equity by many multiples.
Oh, wow.
Larry would get 4 or 5x the equity. Frank would get the same. Anyway, and that the money was coming from his very wealthy parents. Okay, turns out. So anyway, I sell the company.
That's what we all kind of assumed, was that he must be independently wealthy.
And by the way, his dad runs one of the largest pension funds.
So he is
in the United
independently
States.
wealthy.
Yeah.
So we assume that's where
this
the
was
money came
unnecessary. It's just like, these types of folks, like for whatever reason, they do things that you're like, that's irrational.
Yeah.
So anyway, I sold it. He didn't give the equity to the employees. He then went on to borrow another $40 million or $45 million from SBF.
I thought it was only like the...
No, he borrowed $55 million.
Oh, my God.
Company almost went out of business. FTX went down. He called me an hour before the press was going to run that they found out that we'd sold the company, to FTX, and we hadn't. Like, I had sold it to him.
Yeah.
He had borrowed money from
As a
SBF.
personal loan, right? I mean, they didn't sell the company.
Yep.
But who knows what the terms were.
And then they
between...
got, so he lied to all the employees, never gave them equity.
Rough.
And then they, fortunately, Foresight Ventures, a really good group of folks, like I like them a lot, came in a few years later, recently, 9 months ago, cleaned up the cap table, bought out that debt that was owed to the FTX estate, which got paid off. And Larry, Frank, and Steven, and Tim Copeland, and the entire team, who've been just, I think, the best in the business amongst insane pressure, just continue to execute. Like, they have my utmost respect for.
Yeah, I know those guys. They're incredibly loyal and dedicated.
And really good
and they really have been through, I mean, like everybody in this space like us, they've been through the market alone as a ringer.
Yeah.
And then to go through that whole thing.
Yeah. So,
crazy.
And I think everybody, like McCaffrey, he's trying to make his way back in.
Yeah.
He's one of those guys, probably doesn't need to be in the industry.
Well, Mike, I really appreciate it. I think what you're doing at 6 Man, it sounds like you have a pretty interesting and different approach than other VCs I talk to. So that I always find that fascinating as a researcher. And thank you so much, Mike Dudas, for coming on Galaxy Brains.
Really appreciate it. Thanks for hosting me.
That's it for this week's episode of Galaxy Brains. Thanks to our guest Mike Dudas from 6 Man Ventures and my friend Bim Metabibi from Galaxy Trading as always. Everybody have a safe and happy weekend, and we will see you next week. Thanks for listening to Galaxy Brains, the weekly podcast from Galaxy Research. If you enjoy the show, please like, rate, review, and subscribe wherever you get your podcasts. To follow Galaxy Research, sign up for our weekly newsletter at gdr.email, read our content at galaxy.com/research, and follow us on Twitter at GLXYResearch. See you next week.